Hey traders, John Howell here. Today, what I'm going to be sharing with you, an advanced trading technique to really help you with your trading. This technique is all you need is one simple moving average on the chart. I'm going to share with you exactly the moving average you need, and I'm going to show you exactly how you can find overbought, oversold levels, how to find strong momentum in the markets, good time to enter, bad time to enter, when you should be looking to find a trade, and so much more. You're going to get so much out of this. If you're looking to learn more about how to read the charts properly, to see where there's good times and where the worst times to enter, the best times to enter, how to find strong momentum in the markets, then that's exactly what you're going to see in this free training. So enjoy today's free training. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Traders, the indicator that I like to use, which is just one indicator on the chart, and it really helps you with identifying which way you should be looking to trade. Should you be looking to trade long, meaning you want to profit from the market going up, or short? You can actually make money from going down as well too. So the number one indicator that I like to use on any chart is a moving average. So the moving average that I like to use, see this blue line through here? This is what's called a 52 moving average. Now, it doesn't matter what time frame this is. I'm going to share with you exactly why it doesn't matter what time frame this is, but whatever chart you're looking at, this could be a daily chart. And so therefore, if I go to my edit and my settings, you can see here that we have 52 as the period. And then I've just got a blue there because I like the color blue. So that is the very first thing that I want you to put on the charts. And what this does, there's actually two things that I use this for. The very first thing that I use this for is that if I squeeze my charts up now, notice I'm squeezing my charts up. Notice what happens. Notice that when it gets too far away from the moving average, too far above, too far below, too far below, too far above, guess what happens? What ends up happening? It comes back to the moving average. And so that's the very first reason why I like using a longer term moving average, like a 52. You can use a 10 or a 9 if you want, or a 20, but I like to use a bit more of a longer term, so that's why I like to use the 52. So the very first thing that I like to use the 52 is when I'm looking to trade, I'm asking myself, how far away are we from the moving average? It's the very first. Because if we're too far away, just like down the bottom here, guess what? We're too oversold, and it's like an elastic band and we're likely to come back. Are we too far above it compared to the average price? If so, we're likely to come back. You can see it from there, even the stretch from this point here, and it comes back to it. So whenever I'm trading, the very first thing I'm asking myself is that if I'm looking to, say, go long, all right, I'm looking to go long in the markets, and if I'm looking to go long, but I can see it's, say, for example, right up here, and I can see that it's actually pretty far away from the moving average compared to this point here, and this point here, and this point here, and so on and so forth. If I can see that this is quite the maximum distance away, well, I know we're getting into that overbought territory. And so therefore, if I'm going to take a long trade, meaning I want the profit of the market going up, I'm now putting the odds against me because I'm now trading, I'm now getting in an overbought territory there. So that's the very first thing that I like to use with the use moving average there, is where is the overbought and the oversold territories. So the second thing that I like to use when I'm looking at the 52 moving average on the charts, and again, there's nothing special about the 52. It's just one of my earliest mentors really, he really sort of, this is the moving average that he likes to use. So therefore I've used it, and I've just stuck with it ever since then because it's really helped me as well too. Now, moving on now through to the second point of view, right? The second thing that I like to use the moving average for is the direction of the moving average. Okay, the direction of the moving average. So if I open up my chart a little bit, the overall flow of the moving average is like a stream. Okay, and that stream has momentum. So if we think about us as like a surfer, okay, we're a surfboard, and if we've got a surfboard, but we go out and we go look at the ocean, and we go look at the rip and the tide and so on and so forth, but then all you see is just that. Are you gonna try and go out there and try to catch a wave? You wouldn't, right? Because it's flat. There is what we call flat momentum. There is no momentum that's going to pick you up and take you to the promised land, so to speak. So, but just say you did that, but then just say, for example, you saw that there was a really good strong current, strong rip, and it was streaming up like this, right? It was streaming up like that, all right? And this is called just a wave. Now you're a surfer. Now you're like, yes, I'm looking there. I can see there, right? So what the surfer does is he paddles out through here, right? He paddles out through here, and he looks to come down into here. He looks to jump onto the wave, and then guess what? And the wave then takes him up. Makes sense? So all that is we're like the surfer. We're waiting to make sure that there is good, strong momentum. So therefore, if we're looking to get into a trade, that we have a good probability of the momentum taking us. A lot of the times traders will get into the markets, but when the moving average is flat, meaning there is no momentum in the markets, they get in and the market doesn't move anywhere, it doesn't do anything. And they're wondering why the market is not going in their favor. So what I like to do is when I'm trading, I like to use the moving average when the market is trending up. And notice this here. Notice how we actually had a very strong trending moving out. Look at all of that strong trend. See how it was very strong on the upside? Look at this here. Every time we got a pullback, nice bounce, bouncing. Look at that there, bouncing up and then bouncing up, right? There was a lot of momentum pushing this back up. So every time we got a bit of a pullback, it bounced up even through here, right? It bounced up and it bounced up through there. So by looking at that, by looking at the direction of the moving average, we can see that for me personally, I like to trade when we have a strong trending moving average, because there's strong momentum, and therefore the momentum, just like the surfer, is if the stronger the momentum, the stronger the move is likely to be, right? If you have a really good strong wave and the surfer jumps on that, it's now likely to carry you to the promised land, so to speak. So therefore, for me personally, I'm always looking for trades that do that. Now, when it comes to the exact setup and the exact entry point, in a couple of days time frame, I'm going to share with you exactly all the details to my system. But I wanted to share this with you first, just so you can go to your charts and then start to actually have a look at it and start to actually see this. Now, if I bring up an example of a downtrend, look at this through here. All right, look at this, and this is where it becomes really interesting. And I'll bring this up through here. You can see how we actually had a very strong moving average. Look at this, very, 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 very strong, wasn't it? And therefore we had a very strong current. And then look what happened. Notice how we actually we started to flatten out through here. We didn't have any strong trend, did we? We didn't have any strong momentum. The moving average wasn't strong trending up, so there's a lot of momentum up. Then we started to flatten out through here. And guess what happened? And guess what the market did? The market did absolutely nothing. This is the worst time. This gets a big X, right? A big X. This is the worst time to be trading. Why? Because there is no momentum behind you. But then guess what happened? The moving average started to what? Started the strong trend down. And now look what happened, right? We started to actually have very big moves on the downside, very big moves on the downside. So we went from a strong trending momentum to the upside. This is when you get the moving average like this is where I'm looking for long setups. And again, in a couple of days, I'll teach you all the details to the exact setup using the moving average, what type of setup I'm looking for, what's the entry point, and so on and so forth. I'll teach you that in a couple of days time frame, but I wanted to share this with you first. because it's an advanced, but it's very, very, very simple of the two areas that I'm using this for. Remember, remember the step number one is how far away are we from the moving average. So it's giving me a warning sign if I'm looking to get into the trade. But then also, secondly, I'm looking for the direction of it to actually see this here. So it's actually a real high probability to try look for a long setup here. And let me just do this here. So as you can see and you can even see, look at this here. Look at this here. Notice how the moving average was flat through there. What happened to the market? Nothing, right? So if you're looking to go long here, it's like you're jumping into a river and it's like, oh, why aren't I going anywhere? I'm just sitting here, right? That's the reason why it's not a good idea to trade here. It's a good idea to, when the market starts to pick up, as you can see, we start to get a very strong moving average. I'm looking for long signals through here. Why? Because we have a strong moving average. Then we go through a period of what? Flat moving average again. Therefore, this is actually a very, very, not a very good time. Guess what happens to the market? Market did absolutely nothing. Then it started to shift trend on the downside. And now the downside has a strong shifting momentum on the downside. And then guess what happened? Then the market started to strongly step down. So now we've got strong momentum on the downside. So two things, once again, just to recap this here. And I want you to go check this out on your chart to be able to see it as well too, is that whenever we have a good, strong trending moving average, there's a lot of momentum behind that. And so therefore, they're the type of trades that I'm looking to use myself. So go to your trading software right now, add the 52 moving average to it. You'll be able to see, you'll be able to test it all out. And in a couple of days time frame, when I share with you all the details to my trading system, I'll share with you exactly the 52 moving average. I'll share with you the exact setup I'm looking for, the exact entry candle, and so on and so forth. So I hope this helps you out today, guys, and I'll see you in the next video. Traders, I want to invite you to my webinar that I'm running today. And on this webinar, I'm going to share with you all the details to my #1 trading system for the last 17 years and how I only trade 1 hour per day. Plus, also going to be learning the 3 secrets that I had to master over the last 17 years to generate a really good income. If you go to johnsfreetraining.com, or there should be a link in the description, click on that, go over there right now, register. If you are struggling with the trading right now, I promise you this is going to completely game change, because you're going to understand why you are going backwards and why you're losing money. And then I'm going to teach you exactly what the system I use that gets me a really high % win-loss ratio. So this is what I want you to do right now. Go to johnsfreetraining.com. Go over there, register for my webinar right now today, because you're going to absolutely love it. Or there should be a link in the description. And I look forward to seeing you on the webinar. So go to that right now, and I look forward to seeing you on my next webinar. Go to that right now. Go to johnsfreetraining.com. Go to that right now.